Hi, everyone. We will get started here in just about 30 seconds, just letting everybody in. Okay, well, good afternoon, everyone, and welcome to our webinar, Withholding Basics. I'm Cindy Nellis. I'm the director here at Penn West University Clarion Small Business Development Center, and we welcome you. Whether you are ready to hire your first employee, you already have employees, or you are looking to pay someone to perform services for your business, today's training will help you navigate withholding basics from W-2 income to 1099s. You will learn when you need to withhold from compensation, which income statements apply to different types of employees or contractors, how to file and pay withholding, as well as year-end reporting. Additionally, this module will touch on withholding for retirement income and PA rules for different types of retirement withdrawals. We'd like to thank the Department of Revenue for partnering with us to present today's webinar, along with our full lineup of our tax series. And this flyer outlines the 4-part tax series that we do run 3 times a year. So today ends our 4-part series. We'll start again next month with getting started with My Path, and we hope that you do join with us. So to get started, I would just like to remind everybody that if you have a question for me, the host, please enter that in the chat. If you have questions for our experts, we do have a team of them here from the Department of Revenue, and then we ask that you use the Q&A. But first, I'd like to introduce you to the Small Business Development Center. The Small Business Development Center, we are a grant-funded program. Our mission is to help businesses start, grow, and succeed. We're here to provide education, information, and tools to help you, our business owners, make better business decisions. We primarily spend our time providing one-on-one business consulting services, but of course today we also do training like today. Our consulting services are provided at no cost and are confidential. We are able to meet you in person, virtually, or by phone, however you'd like to get started. So our training seminars are on a variety of topics that target the needs of our small business owners. So we encourage you to stay connected with the SBDC, take a look at what we have to offer. We do offer a variety over the course of each year. To us, a small business is generally defined as a business with less than 500 employees. And we do use our funding to provide you access with many different types of databases, typically related to industry and market research, as well as financial analysis, and using some of our business lists to implement your marketing strategies. And finally, the Small Business Development Center, we do partner with many economic development organizations, and we're here to help connect you with them to have access to even more resources than we have to help you start and grow your business. In Pennsylvania, the Small Business Development Center network includes 15 centers, all located at institutions of higher education. We are a part of the network of America's Small Business Development Centers, which is a national network, enabling you, no matter where you are, to access our programs, services just in your neighborhood. I will be sending out these slides and hope that if you're not connected with the Small Business Development Center, that you do connect, request assistance, and start working with one of our business consultants today. So this is how you get started. I do include my contact information. Truly, there is no wrong door. We just encourage you to connect with us, however, and we'll get you directed to the Small Business Development Center in your neighborhood. So with that, I'd like to turn it over to Rachel Washington, who will be leading today. She is a research analyst with the Department of Revenue and their Customer Outreach Relations and Engagement Division. So Rachel, I will turn it over to you.
All right, sounds good. I'm going to go ahead and share my screen real quick. All right, hopefully everyone can see that just fine.
Looks good.
Awesome. So, hi everyone. Once again, I'm Rachel Washington, and thanks for joining us today and learning more about withholding basics. I do work in CORE, which stands for Customer Outreach, Relations, and Engagement, here at the Customer Experience Center within the Pennsylvania Department of Revenue. And just so you guys have a little bit of background about me, I started as a temp here at the Department of Revenue in 2018, and I was answering customer questions on the phones. And then once I graduated from Temple University, I had a degree in post-production with essentially a minor in accounting. And I've since then been promoted to this position here, where I help create Revenue 411 videos, and which I specialize in. And then I also help with other outreach and education materials, which we will go over here today. So let's get started. We added this module to our entrepreneurship or new business series to help business owners like you guys understand how to properly collect and remit withholding on behalf of their employees or contractors. So today, we're going to cover a wide range of information relating to withholding tax and the nuances that go into it. We will start with some fundamental information about employer withholding and then move into the different types of withholding accounts we have here in Pennsylvania. Once you understand that what you need to do as a business owner, we will then talk about how to register for a withholding account and also talk through some filing and paying requirements. After all of that, we will be covering some things you should know about record keeping. What most new business owners don't realize is just how important it is to keep good books and records. So please understand that this is for your own benefit. If you ever get audited, which, by the way, is a standard business practice, you want to be able to show that you have done what is necessary to remain in compliance with the state. Okay? And then finally, we will wrap up today's presentation by reviewing some resources that are out there to help you find answers should you have any additional questions after today. So let's get into the fundamentals. Before we get started, let's define a few key terms that you are going to hear throughout this presentation. The first term is employer. An employer is an individual or an organization in the government, private, nonprofit, or business sector that hires and pays people to perform work. This would actually include most of you guys. Employers have a responsibility to withhold certain taxes from the paycheck of those individuals on behalf of the federal, state, and local government. These taxes are called trust fund taxes. So the next term we have here is employee. An employee is someone that another person or company, otherwise known as an employer, hires to perform a duty. Employers compensate employees for their work to grow and maintain their business. Employees typically have a specified pay rate and a written or implied employment contract with the party they work for. However, some hired workers are not legally classified as employees and have a separate tax classification. Which then brings us to non-employee. So, a non-employee is a self-employed person or entity contracted to perform work or provide services to another entity as non-employee. As a result, non-employees usually must pay their own Social Security and Medicare taxes. They also have to remit estimated income tax payments. And we'll keep going. The next term here is withholding. Obviously, this entire presentation is about withholding, but it is important to note that we are talking about the money that an employer deducts from an employee's gross compensation and pays directly to the government. So then we have the word compensation. Pennsylvania compensation includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent in cash, in property or otherwise, unless specifically excluded. So, employer withholding is due on all types of taxable compensation, and it is not required on non-taxable compensation. A common item that may be excluded from compensation for a small business is an employee's personal use of employer-provided property or employer-provided services. Additionally, any damages, whether by suit or otherwise, for personal injuries or sickness and payments made under Workers' Compensation Acts, Occupational Disease Acts, or similar legislation for injuries received while working are not included in compensation. Then we have benefits. Benefits are any form of perks or compensation that are provided to employees in addition to their base salaries and wages. Some are required by law, while others are optional. Employee benefit programs, such as pensions, profit sharing, and stock bonus plans, and simplified employee plans, or SEPs, are established by employers to provide additional compensation to participating employees upon or after separation from service, the completion of a fixed period of participation, the lapse of a fixed number of years, or a showing of financial hardship. Employee welfare benefit programs are established by employers to provide benefits to employees or their beneficiaries, such as child care facilities, life, accident, or health insurance coverage, legal services, medical benefits, supplemental unemployment compensation, or SUB, tuition reductions, disability benefits, strike benefits, and dismissal pay. So, I'm going to give you guys a second here. We're going to take a brief pause to see what you remember. I know it's really soon, but let's see what happens. Take a second to read the question and then put your answer either in the chat or in Q&A. It might be easier to do Q&A. So I'll give you guys a second and let's see what you guys remember. What is included in compensation? All right, we got 2 people saying D. That's great. Let's see what else anyone else says. Awesome, guys. I'm going to give you guys just a couple more seconds. All righty. You guys are correct. The correct answer is D. Pennsylvania compensation, as a reminder, includes salaries, wages, commissions, and every other item of receipt related to employment, whether received directly through an agent, in cash, in property, or otherwise, unless specifically excluded. As employers, it's important for you guys to know what is considered employee compensation and what is not. So keep this in mind as we continue. All right, taxable benefits included in employee compensation. Non-cash benefits, which are reportable as compensation under Internal Revenue Service rules, are generally taxable for Pennsylvania personal income tax purposes and are not subject to withholding. Payments made by the employer to help employees with additional medical or dental expenses not covered by medical insurance is taxable. Payments made to workout facilities or gyms, life insurance payments, as long as they are not group life insurance, are taxable. So are non-job related educational assistance, pension plans, 401k plans, or other retirement plans. In general, payments made by employers for employee welfare benefit plans that provide medical, dental, or vision care for their employees are not considered taxable compensation for Pennsylvania purposes. Further, supplemental unemployment compensation benefits and most group term life insurance premium payments should not be included in compensation. And I'm going to take 1 second here. Can you guys hear me okay? Because there are fire trucks outside currently that are very, very loud.
We're good, Rachel. We don't hear them.
Awesome. That means this microphone is working perfectly because they are honking their horns and they're very loud. Oh my goodness. Okay. So, the personal use of an employer's property, whether it's leased or owned, or a service provided by the employer, is not considered taxable compensation. Non-taxable items include the personal use of a company car, accounting services, or childcare provided, not reimbursed by the employer. And give you guys just 1 more second to look through this as I wait for them to go away. All right, we're good. So, Pennsylvania withholding. Withholding taxes vary by state and local tax jurisdictions. Most states operate like the federal government and have tax brackets, meaning the percent of tax taken depends on their level of income. However, Pennsylvania is different. We have a flat tax rate of 3.07%. If you guys take anything from this presentation, just remember this flat tax rate for Pennsylvania withholding taxes is 3.07%. Write that down. So, meaning, regardless how much you make, everyone is taxed at the same rate of 3.07%. The amount of tax withheld is a credit against the income taxes that the employee must pay during the year. So, for Pennsylvania income tax withholding purposes, there are 3 different types of withholding that we are going to talk about, all of which can be filed on MyPath. The most common is employer withholding. Next is other income withholding, and last is retirement withholding. The type of withholding account that you need varies depending on whether you hire employees or non-employees to do the work. Additionally, there's some miscellaneous sources of income that may subject you to withholding and with retirement distributions as well. An employer withholding account is necessary when you are issuing your employees W-2s. So next is other income withholding. That is used when employees are issued a 1099 NEC. You will only create an other income withholding account if you choose to withhold taxes for Pennsylvania on those 1099 NECs. And then last is a retirement withholding account, which is used when the employee is issued a 1099-R. If you are a business owner, hiring or contracting one or more individuals to provide services, then you must determine whether the individuals providing services are employees or non-employees before you will be able to decide what type of withholding accounts that you need. In determining whether the person providing service is an employee or a non-employee, all information that provides evidence of the degree of control and independence must be considered. So there's something called common law rules. These are facts that provide evidence of the degree of control and independence that fall into 3 categories. The first is behavioral. Does the company have control or have the right to control what the worker does and how the worker does his or her job? Next is financial. Are the business aspects of the worker's job controlled by the payer? These include things like how the worker is paid, whether expenses are reimbursed, who provides tools, supplies, things like that. And the next is type of relationship. Are there written contracts or employee type benefits? For example, pension plans, insurance, vacation pay, things like that. And will the relationship continue? And is the work performed a key aspect of the business? Businesses must weigh all these factors when determining whether a worker is an employee or a non employee. Some factors may indicate that the worker is an employee, while others indicate that the worker is an independent contractor or non employee. There really is no magic or set number of factors that really makes the employer an employee or an independent contractor, and no one factor stands alone in making this determination. Also, factors which are relevant in one situation may not be relevant in another. So the keys are to look at the entire relationship and consider the extent of the right to direct and control the worker. Finally, document each of the factors used in coming up with a determination. If it is still unclear whether a worker is an employee or an independent contractor after reviewing the three categories of evidence, then Form SS8, Determination of Worker Status for Purposes of Federal Employment Taxes and Income Tax Withholding, can be filed with the IRS. The form may be filed by either the business or the worker. The IRS will review the facts and circumstances and officially determine the worker's status. Be aware that it can take at least 6 months to get a determination. A business that is continually hiring the same type of workers to perform particular services may want to consider filing the Form SS8. Reporting compensation. Additionally, you need to know if you have employees or non employees so that you can determine what form to use for reporting compensation at the end of the year. If you have employees, you will need to issue a W 2 and file in duplicate with the Pennsylvania Department of Revenue. If you hire non employees, you will need to issue a 1099 NEC. And if you pay via miscellaneous sources of income, you will need to issue a 1099 miscellaneous. In addition, your employees may receive a 1099-R if they took a distribution from retirement, but that will likely be issued from the financial institution that is administering their retirement or pension plan. It's important to note that these forms need to be filed in duplicate with the IRS and the Department of Revenue, regardless of whether there is actual withholding, so long as you have paid more than $600. Once you have determined that you have employees, you need to withhold income tax from their compensation using a W 2, thus requiring an employer withholding account. Pennsylvania law requires employers, like many of you, to withhold Pennsylvania personal income tax from employees' compensation in two common cases: when resident employees perform services within or outside Pennsylvania, and when non resident employees perform services within Pennsylvania. In simpler terms, if you are a business located in PA or conducting business in PA, you should withhold income tax on all compensation paid to PA residents. But you are only required to withhold on PA source income for non residents. So, if the employee is doing the work, does not live in PA, but the work is being performed in PA, there is a withholding requirement, whereas if the employee does not live in PA and the work is not being performed in PA, there is no withholding requirement. Once again, the PA personal income tax rate is 3.07%. This means you must withhold 3.07% of the gross compensation that you are paying your employee. We encourage you to deposit this into a separate bank account until you are ready to remit payment to the department. The only exception to this is when an employee is a resident of Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia. Those states are considered reciprocal states, meaning that if their employees live in one of these states, employers will only withhold taxes for that state. So, even though it may be deemed PA sourced income because the work is being performed in our state, we have agreed not to tax them based on their residency in one of these reciprocal states. In these cases, the business is not required to withhold to Pennsylvania income tax on the PA sourced income if the employer withholds to one of the aforementioned states. Employees who live in these states must submit an REV 419, that is REV 419, to you, their employer, to indicate they live in a reciprocal state. You must keep the completed form in their payroll records for at least 4 years in case of a withholding audit. If a business mistakenly withheld PA income tax for a resident of a reciprocal state, the employee will need to file a PA 40 Pennsylvania personal income tax return to request a refund. A great example of this would be if your company is located near the border of Pennsylvania and Ohio. If you hire an employee who lives in Ohio but commutes to Pennsylvania to work, you do not have to withhold Pennsylvania taxes for your employee because Ohio is a reciprocal state and you should instead withhold to Ohio. So, if you have determined that you are hiring independent contractors or non employees to perform services and withhold their taxes, you will be required to open an Other Income Withholding account. You will see on the slide that you are required to open an Other Income Withholding account when you hire non employees that do not reside in PA to perform services worth over $5,000 for the year. Per IRS rules, the 1099 NEC non-employee compensation must be filed for each person that is not an employee of a business to whom the business paid at least $600 during the year. However, PA rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. What is unique about other income withholding is that it only applies to non-resident, non-employees to whom you pay over $5,000 annually. This means if you hire a resident contractor or non-employee who lives in PA, you do not have a withholding requirement. In these situations, you will still need to file the 1099 NEC to report to the income you paid, but you will not need to collect any withholding. Rather, the non-employee should be making estimated payments on their income. Another reason you may have to open an Other Income Withholding account is to report miscellaneous sources of income. Again, withholding is only required if you pay via miscellaneous sources of income to non-residents in the amount of $5,000 or more for the year. As we mentioned previously, miscellaneous sources of income are reported on the 1099 miscellaneous. A business is required to file the Form 1099 NEC and withhold Pennsylvania personal income tax if all of the following 4 conditions are met. Number 1, the non-employee does not live in Pennsylvania. Number 2, payment was made to an individual, estate, trust, or disregarded entity owned by an individual, estate, or trust. Number 3, payment for services was made in the conduct of your trade or business. So payment for services was made in the conduct or trade of your business is number 3. Number 4, payments equaled more than $5,000 for the entire year. So then on the other hand, the withholding of Pennsylvania personal income tax is optional if the payments did not total $5,000 for the year, the non-employee lives in PA, withholding is not required on residents, payment was made to a partnership, corporation, or multi-member LLC. Those entities have their own non-resident withholding requirements, but we're not going to get into that at this time. And then number 4, payment was for services not related to your business. So please keep in mind that the payments we are referring to here is anything that falls under the compensation class of income or business class of income. We also mentioned miscellaneous income. So here's some examples of miscellaneous income: royalties or broker payments, rents, prizes and awards, medical and healthcare payments, crop insurance proceeds, cash payments for fish or other aquatic life you purchase from anyone engaged in the trade or business of catching fish. Generally, the cash paid from a notional principal contract to an individual, partnership, or estate, payments to an attorney, any fishing boat proceeds. For Pennsylvania purposes, you are required to withhold PA personal income tax on certain payments of PA source compensation, business income, and lease or rent payments made to a non-resident individual or entity. This requirement applies to payments that meet or exceed $5,000 annually. Most often, small businesses would use the 1099 miscellaneous if they are paying rent to someone for their space. If the rent is more than $5,000 a year and the landlord does not reside in Pennsylvania, the business should withhold personal income tax at a rate of 3.07% from the payments. Keep in mind that to qualify, you must be making rental payments to an individual, estate, or trust. If you are renting from something like a property management partnership, you don't have to withhold. As mentioned previously, partnerships, corporations, and multi-member LLCs have their own non-resident withholding requirements. Please be sure to follow IRS rules for issuing the 1099 miscellaneous. And finally, the last withholding account is retirement withholding. As a small business, you will likely not open a retirement withholding account, as you will probably not be the administrator of the actual retirement plan for your employees. However, for general information, the Form 1099-R must be filed for each person who made a designated distribution of in excess of $10 or more from profit sharing or retirement plans, any individual retirement arrangements, which are IRAs, annuities, pensions, insurance contracts, survivor income benefit plans, permanent and total disability payments under life insurance contracts, charitable gift annuities, and things like that. Once again, we're going to take a very brief pause to see what you remember. Take a second to read the question, and then put your answer in either the chat or the Q&A. Which type of withholding uses a 1099 NEC income statement? Anyone know? All right, people are saying B. All right, I'll give you guys a couple more seconds here to answer. I appreciate you guys participating. All righty. So you guys are right. The answer is B. The 1099 NEC non-employee compensation must be filed for each person that is not an employee of your business if your business has paid them at least $600 during the year, according to the IRS. However, PA rules state that non-resident withholding doesn't kick in until $5,000 of income is paid to an individual or business. So remember, other income withholding only applies to non-resident, non-employees to whom you pay over $5,000 annually. So once you have determined what kind of withholding accounts you need, you would have to register for those taxes, and let's talk about how to register for those tax accounts on my path. Registering for business tax accounts is going to vary slightly depending on whether you are an existing entity in PA or a brand new entity. So, whoops. There we go. Apologies. So, brand new entities, who do not have any existing or tax accounts with the Pennsylvania Department of Revenue will complete the PA online business registration from the MyPath homepage. To get started, you will type in mypath.pa.gov, scroll down to the panel titled Registration. From there, you will click the link that says Pennsylvania Online Business Tax Registration and run through a series of questions. The system is intuitive, and depending upon how you answer the questions, that will determine what questions you are presented with. Once that is complete, you will immediately receive a confirmation number you will want to save for your records. Additionally, you can use that confirmation number to create your MyPath profile. If you need help setting up your MyPath profile, please see our Revenue 411 video on creating a primary user profile. If you are an existing entity, say you have a sales tax account and you want to add employer withholding, you would need to create your MyPath profile, or if you already have one, log into your MyPath profile and click on the More tab at the top of the screen. From there, you will find a hyperlink that says Register New Business Tax Accounts. This is very similar to the one on the homepage, but some of the information will be pre-populated for you since you already have existing tax accounts. So please keep in mind that most of the time, sole proprietors will have what we call existing accounts because their personal income tax accounts are linked to their Social Security number. If you are attempting to register from the home page and you are getting an error message, this is likely the problem. Registering online establishes business tax accounts with Pennsylvania Department of Revenue, as well as opens unemployment compensation accounts administered by the Pennsylvania Department of Labor and Industry. Although, all filing and payments for unemployment compensation withholding must be done with the Department of Labor and Industry. So, once you guys are completely registered, you can get started with filing and paying your withholding taxes. Withholding returns are filed every quarter with the Pennsylvania Department of Revenue. Every business owner that's required to deduct and withhold tax must file a quarterly return of income tax withheld on or before the last day of April, July, October, and January for the prior 3-month period. In addition, these returns must be submitted electronically. Currently, there are 2 methods in which you can do this: online or using a third-party vendor. We strongly encourage you guys to use our online MyPath portal to file and pay your withholding tax amounts. Not only are you able to file and pay for the current year, but you are also able to view previously filed returns, access notices that have been issued from both MyPath and eTides, request statements of accounts that are available immediately, send messages to the department, and more. Another very important feature that you can grant permission to is that you can grant permission to others, like your bookkeeper, to also view information regarding your returns. You can access the MyPath portal at mypath.pa.gov or simply visit revenue.pa.gov and click on the icon that says MyPath right from the homepage. Please note that you must create a user profile to utilize this service. Again, if you need assistance with creating your user profile, please see our Revenue 411 video on creating a primary user profile. If you need help filing your withholding return, you can also watch our Revenue 411 video on filing a quarterly W-3. Lastly, the Department of Revenue does have approved third-party vendors who will provide e-filing software for customers who do not wish to use the MyPath portal. A list of approved software vendors is available on the department's website at www.revenue.pa.gov. Whereas the filing frequency for withholding taxes is always quarterly, the payment frequency may vary depending on the amount of withholding that you are collecting each quarter. When you initially register for a withholding account, your payment frequency will automatically be set as quarterly. Near the end of every year, the Department of Revenue reviews the average of the current year, first and second quarter withholding payments, as well as the prior year, third and fourth withholding quarter payments, to determine the filing frequency if the filing frequency needs adjusted. So, if your total withholding is under $300 per quarter, you would have a quarterly payment frequency. In this case, the taxes are due at the last day of April, July, October, and January. If your total withholding is $300 to $999 per quarter, you would have a monthly payment frequency. For these employers, the taxes are due the 15th day of the following month. If your total withholding is $1,000 to $4,999.99 per quarter, you would have a semi-monthly payment frequency. For semi-monthly employers, the taxes are due within 3 banking days of the close of the semi-monthly period. And lastly, if your total withholding is $5,000 or greater per quarter, which is $20,000 per year, you would have a semi-weekly payment frequency, in which case the taxes are due on the Wednesday following the pay dates for employers whose paydays fall on a Wednesday, Thursday, or Friday, and on the Friday following the pay dates for employers whose paydays fall on Saturday, Sunday, Monday, or Tuesday. Similar to filing the returns, employers can remit their withholding payments one of two ways. Our recommended way is online via mypath.pa.gov, or you guys can do this by using a third-party vendor. So here's some important things you guys need to remember. Number 1, payment vouchers are only available via MyPath, and the use of other tax forms could result in non-filer notification and or the misapplication of the tax payment. And 2, per regulation, taxpayers who are making payments of $1,000 or more must remit them through electronic funds transfer, which is also known as EFT. Failure to comply with the electronic funds transfer remittance requirements may result in an assessment of a penalty equal to 3% of the total tax due, not to exceed $5,000. The penalty may be imposed on all payments of $1,000 or more that are not presented to the Department of Revenue by an approved payment method. So, if every quarter you send a check for over $1,000, you're going to get hit with an EFT penalty every quarter. If you need assistance remitting your payment via our MyPath portal, please see the Revenue 411 video titled Making Period Deposit Payments. So, in addition to remitting quarterly returns and payments, employers must also file an end of the year annual reconciliation known as the Rev 1667. This annual reconciliation not only reconciles all 4 quarterly returns that were remitted, but it also reconciles any W-2s or 1099s reported by the employer. You must do this for each withholding account you have. If you need help filing the Rev 1667, please watch our Revenue 411 video, which is called Filing a Rev 1667. We cannot stress enough the importance of filing the annual reconciliation. Every year, there are many new small businesses that forget to file the Rev 1667, which then flags the account for noncompliance. When filing a 1099 miscellaneous or a 1099 NEC, ensure that you only enter information for the amounts on which you withheld Pennsylvania state taxes. If no taxes were withheld, leave those fields blank. Please allow up to 48 hours for W-3 deposit period payments and income statements, W-2 wage records, 1099-R distribution records, and 1099 miscellaneous, 1099 NEC to automatically populate on your return. If the pre-populated figures do not match your records, you may manually adjust the return figures or allow enough time for the payments and income statements to process, which takes about 48 hours. When manually adjusting the total compensation and the total tax withheld, you must include the number of income records that will be provided to support these totals on the records filed but not yet processed by the department field. Figures for each quarterly period, the amounts of wages or distribution paid, and tax withheld in Part 2 are pre-populated based on the information previously provided to the department. These fields may also be manually updated if quarterly returns have not been previously filed and/or processed. The Pennsylvania Department of Revenue is reminding customers that employee W-2 wage records and 1099s must be submitted annually to Pennsylvania by January 31st following the tax year being reported. This includes 1099-Rs, 1099 miscellaneous, 1099 NECs, and annual withholding reconciliation statements, which are Rev 1667s. Customers who file 10 or more W-2s or 1099s are required to file those records online through MyPath, which is at mypath.pa.gov, which is the Department of Revenue's online tax filing system. You can also upload files in bulk using the CSV format. For detailed instructions, at this screen, click on View File Specifications. So the same laws that impose taxes also impose record-keeping requirements. Records must be maintained for specific periods of time so the PA Department of Revenue may administer tax laws effectively. The general rule is that you have to keep records as long as necessary. Many times, this means you must keep records supporting the information on a tax return until the period of limitations for that return expires. A period of limitations is the amount of time the department has to assess additional tax and the amount of time you have to amend a return to claim a credit or refund. Periods of limitations for withholding tax assessments is 3 years and begins when a return is filed. If returns are filed before the due date, they are considered filed on the actual due date. For refunds, the period of limitations is based upon the date the tax is paid. To comply with regulatory requirements, an employer must maintain records for each and every employee and of how much, if any, of that tax was deducted or collected during the payroll period. The records must provide a breakdown for each of the following: amounts withheld greater than the required 3.07% pursuant to a written agreement under 61 PA Code Section 113.3b, amounts deducted pursuant to 61 PA Code Section 113.72 for an under collection is another withholding period, and amounts deducted in error. Remember that we follow many of the same reporting and documentation requirements as the IRS, so make sure you consult their requirements. In addition to your payroll records must show that you withhold Pennsylvania personal income tax on all taxable compensation at the proper rate and that you remitted the withholdings to Pennsylvania. To show these things, you must have documentation showing amounts and dates of all wage, annuity, and pension payments made to employees, amounts of tips reported to you by your employee, records of allocated tips, records of fringe benefits and expense reimbursements provided to your employees, dates and amount of the tax you withheld from their pay, dates and amounts of your withholding tax deposits. We advise that you do separate deposits for these transactions, so they are usually reconciled with your books. Copies of withholding tax returns you filed and confirmation numbers. A standard payroll journal and an accrual account can be used to record this information. and will help serve as the basis for completing the W-2 wage record report. As we discussed earlier, employees who are residents of reciprocal states do not owe personal income tax to PA on their wages, as their W-2 income is taxable only to their resident state. So, if your employee lives in Indiana, Maryland, New Jersey, Ohio, Virginia, or West Virginia, please have them complete a Rev 419 and retain for your records. Again, as a reminder, if you, the employer, accept the Rev 419, you must withhold the reciprocal state tax. Otherwise, you must continue to withhold PA tax. 1099 recipients are slightly different in that you don't have to worry about any benefits or business expenses. Anytime there is PA taxable income for non-employees, it should be reported on a 1099. You will be required to submit copies of the 1099 NEC and miscellaneous forms showing recipient number, last name, rents, royalties, other income, medical, healthcare payments, gross proceeds paid to an attorney, non-employee compensation, box 1, state tax withheld, state income, schedule type, and if any corrections were made. We stated in the last section that you are required to file a quarterly employer withholding return and then an annual reconciliation for your employer withholding accounts. Your payroll expense records will become the basis of your quarterly employer withholding return W-3. Your records should demonstrate all taxes were withheld at the proper rate and that they were remitted on time. You should keep copies of your W-3 returns, as they will help you in filing your Rev 1667 annual reconciliation. It is important to note that, periodically, the Department of Revenue conducts desk reviews, or audits, in which they review the records of thousands of businesses for tax compliance. This is to ensure businesses have a correct understanding of their Pennsylvania tax exposure and that tax laws are administered in a fair and equitable manner. The reviewer or auditor may conduct a complete review, or they may utilize test methods that allow for the examination of a representative portion or a sampling of the taxpayer's business activities. However, when records are incomplete or inaccurate, the department will develop tax estimates based on other information resources. The other information includes other tax returns and government or industry data applicable to the business. The courts have upheld the department's right to use estimates in developing tax liabilities when reliable records are not provided as required. This is why it is extremely important to ensure you are keeping complete and accurate records at all times. All right, this is my favorite portion. Withholding tax is a very important tax for business owners to deal with, as it is considered a trust fund tax, meaning that the employees are trusting the business to withhold and remit their taxes on their behalf. And the Commonwealth is trusting you to make those remittances timely to the Department of Revenue. Let's discuss some resources that are available should you have any questions or concerns following today's presentation. Some of these have been mentioned previously, and this is simply serving as a reminder. So the first one is the Rev 415 Employer Withholding Information Guide. This guide contains all of the information that we reviewed here today and more. It covers withholding requirements, taxation on benefit programs, expenses, collecting and remitting your taxes, as well as overpayments and refunds, guidance for payroll providers, as well as phone numbers for areas to contact depending on your question or needs. This is available on the Department of Revenue website at www.revenue.pa.gov. Next is the Rev 580, which is our FAQ sheet for withholding. This contains commonly asked questions regarding employer withholding tax and detailed answers. This also includes parameters for paper W-2 submission, phone numbers, and the website for the online customer service center, which I will go over shortly. Here, we have the Rev 588, Starting a Business in Pennsylvania, a guide to Pennsylvania taxes. This is a fantastic resource that touches on all the basics for new business owners. This guide includes information for sales tax, as well as registration, employer withholding tax, and other items that go into owning and operating a compliant PA business. The Rev 1716 is the schedule put out each year that breaks down filing and payment due dates by filing frequency. Both the 2025 and 2026 schedule should be published and available on Revenue's website under Tax Forms and Information. 2024 should be there as well. In addition to payment due dates, this calendar also breaks down return filing due dates. So this is definitely one that you guys want to get a copy of because it is immensely helpful. Next is the Rev 1611. This form is used to calculate the interest on all taxes due after January 1st, 1982. It is calculated by taking the amount of tax due and multiplying it by the number of days past the original due date, then by the daily interest rate. The daily interest rate is derived by dividing the annual interest rate by 365 days. The interest rate for any given year is established by the U.S. Treasury Secretary and is effective on January 1st of each year. For example, for 2023, the rate was 7% annually or 0.000192% per day. All right, so we strongly encourage all of our customers to use our online customer service center. To do this, you can visit the URL listed on the screen or click the customer service icon directly from our homepage. Here, you will find thousands of answers to frequently asked questions. These responses are updated regularly to ensure that the information you are receiving is accurate and relevant. If you are not able to find an answer to your question through the FAQs or general website resources, you also have the option to submit a question to the department. This feature allows users to submit either a general taxability question or a more pointed question regarding a specific scenario to a trained representative who specializes in withholding tax. We will review your submission and respond to within 72 business hours in a process that is very similar to receiving an email. Least we forget, the Customer Experience Center call center. Here, you will be able to speak to a representative skilled in whichever particular tax type you pick from the menu prompt. Our regular business hours are Monday through Friday, 8 a.m. to 5 p.m. And this one is definitely my favorite. We have created what we call Revenue 411 videos to help with filing and paying your taxes. We have mentioned a few of these videos throughout the presentation today, but we encourage you to go visit revenue.pa.gov/videos and see what we have out there. We have so many, they're immensely helpful. All right. And just one last time, I know it's almost one, we have one last question. What is the name of the Employer Withholding Information Guide? This one might be a little bit difficult, but if you guys can get it, I'll be very proud. Give you guys a couple seconds here. This is the last one, I promise. Everyone's saying A. Some people are saying C. I like this question. I always get different answers with this one. This is great. All right, I'll give you guys just a couple more seconds here. All right, guys. I know this one is like the hardest question I have. All right. Here's the answer. The correct answer is C. So make sure you guys write this down because I know this is a harder one to remember. The Rev 415 Employer Withholding Information Guide contains all of the information that we reviewed here today and more. And just a reminder, the Rev 415 is available on the Department of Revenue website at www.revenue.pa.gov. Alrighty. Thank you so much, everyone.
Thanks, Rachel. So I'm going to, before we finish today, just launch a 1-question poll. And while everyone has a chance to answer that question, I'll just quickly remind everyone that next month's webinar is getting started with MyPath at noon on May 14th. And also, and I forgot to mention it, we will be sharing all the slides that you've seen, and we will be sharing the recording from today. I usually get it sent out before the end of today, but if it's not processed and ready, it'll be first thing tomorrow morning. Great. Okay, I do believe I just answered that question for Stephanie. So if you, let me see here a second. Make sure all the questions are answered. I just want to say thank you to Rachel and her team of experts. You guys always do a fabulous job answering questions, and I did see that there were quite a few long ones today. So thank you so much for that. And again, if you are interested in meeting with a Small Business Development Center business consultant, we encourage you to connect with us. Again, you connect with me. All that information will be on the slides. I'll send some additional links in our follow-up evaluation. In addition to the poll, we will be sending out an evaluation that helps us see what other topics you would like to have training on, as well as how you want us to present training. So lots of different questions for you to answer for us in that follow-up email. So be looking for that as well. And so with that, I think we are all set. I'm going to end the poll and just say thank you to everyone. And let's see here. Okay, and Lily, we are actually finishing today's webinar, but I will be sending the email with the recording, hopefully before the end of the day. So with that, let me see here a second. I guess we have one last question that I will quickly ask for our experts to answer. Are royalties considered other compensation? And we have Shannon answering it, so. All right, well, I'm going to actually stop the recording.